It's the biggest financial question most people in Ireland will face. Should you rent or should you buy? The answer is not as simple as the pub talk would have you believe. Today I'll lay out the honest numbers for 2026 and the hidden factors that often tip the scales one way or the other. Let's start with the cost of renting. The national average rent in Ireland has now passed €2,000 a month. In Dublin city centre, you're looking at 2,500 or more for a modest one-bedroom apartment. In Cork, Galway, and Limerick, rents range from 1,300 to 1,700 a month. In smaller towns and rural areas, you can still find places from 900 to 1,200 a month, sometimes less. Now, the cost of buying. The average mortgage interest rate in Ireland in early 2026 is around 3.5%. For a €300,000 home with a 30-year fixed mortgage, monthly repayments come out at roughly €1,350. That's before property tax, home insurance, and maintenance. So at first glance, on a monthly basis, buying often looks cheaper than renting. A €300,000 mortgage repayment of €1,350 is less than the average rent on a comparable property in most parts of Ireland. So why doesn't everyone buy? Because the deposit is the wall most people hit. For a first-time buyer in Ireland in 2026, you need at least 10% of the purchase price as a deposit. On that €300,000 home, that's €30,000 up front. For non-first-time buyers, the minimum deposit is 20%, which on the same property is €60,000. Add legal fees of roughly €2,500. A survey at around $400 to $600, stamp duty at 1% of the price, and moving costs. And the upfront bill for buying that home comes to roughly €35,000 or more for a first-time buyer. That's the entry barrier. Renting requires only a deposit and a month's rent, typically around €4,000 to €5,000. Buying requires 10 times that or more. Now let's look at the longer view. If you rent for 30 years at an average of €20,400 a year, which is $1,700 a month, you've paid over €600,000 in rent. At the end of those 30 years, you own nothing. If instead you bought that same €300,000 home with a mortgage, after 30 years of repayments, you own the property outright. The total paid over 30 years is roughly €480,000, including interest. And the property itself, even with modest appreciation, is likely worth substantially more than what you paid. So over the long term, buying almost always wins. But the long term assumes you stay in one place. If you have to move every 3 or 4 years, the costs of buying and selling property in Ireland eat into the gains very quickly. Stamp duty, legal fees, surveys, valuation fees, and the work of moving all add up. As a general rule, you need to stay in a property at least 7 to 10 years for buying to make clear financial sense over renting. Now let me talk about the hidden factors. First, the Help to Buy schemes. First-time buyers in Ireland can claim up to €30,000 back through the Help to Buy scheme on new-build homes. There's also a first home scheme, a shared equity arrangement that can bridge the gap between your mortgage and the price of a new build. These schemes can make ownership reachable for people who otherwise could not save the full deposit. Second, the rent tax credit. Renters in Ireland can claim a tax credit worth up to €1,000 per single person or €2,000 per couple per year. This credit has been extended through to the end of 2028. Many renters do not claim it simply because they forget or do not know about it. Claim it, it's your money. Third, the cost of upkeep. Owning a home means you pay for everything. The boiler, the roof, the windows, the plumbing. A reasonable rule is to budget 1% of the property value each year for maintenance. On a €300,000 home, that's €3,000 a year you should be setting aside, even if you do not spend it every year. Renters do not have this worry. When the boiler goes in a rented house, it's the landlord's problem, not yours. Fourth, the flexibility cost. Renting gives you the freedom to move for a new job, a new relationship, or a new chapter without the months of effort it takes to sell a house. For some people in some life stages, that flexibility is worth more than the financial gain of owning. And fifth, the security factor. The Irish rental market has its problems, no question. Notices to quit, rent increases, and landlords selling up have caused real disruption to many renters. Owning your home once you have it gives you a stability that renting in Ireland today simply does not. Here is the honest summary. Buying wins financially if you can save the deposit. You plan to stay put for at least 7 to 10 years and you can absorb the upkeep costs. Renting wins if you need flexibility, you cannot raise a deposit yet, or you live in an area where rents are still genuinely lower than the equivalent mortgage repayment. There is no universal answer. There is only your answer based on your numbers, your stage of life, and your honest assessment of what you can afford and what you actually want. Thanks for watching. Tell me in the comments which side of this question you're on. Subscribe for more honest Irish money talk. Mind yourselves and do the maths twice before you sign anything.